Hello, I'm Robert Maltby. This is Maltby's Minute on the Market with our June 2023 update. We're going to cover the bull within the bear, the Magnificent Seven continuing to roll, uh, with a reference that we coined back in April that now is being pillaged by the market strategists at B of A. Thank you very much. Our proprietary MMI continues to move up to nearly neutral, and why AI is not in bubble phase yet. So go to our website, singularresearch.com, and sign up for a complimentary trial so you can get the flow of content and information to keep you profitably invested, we believe, moving ahead in this very difficult marketplace. All right, let's talk about our major market indicators. We're looking at nearly neutral, which means we're slightly negative. Let's start with one of the factor components is very important, which is sentiment. Sentiment is actually positive because it's so negative. The put the call index is 1.1 puts the calls. The AAII Bull to Bear Pundit indicator positive at zero point 0.7 bulls to bears, and short interest positive at 4.5 days to cover. Looking at technicals, moving to positive ground, pushed by the Magnificent Seven, in fact, but we got the major indices, the S&P and the Triple Q and the NASDAQ, all moving above the 200-day moving average, whereas the small caps, evidenced by the Russell, and the micro caps, below the 200-day moving average. Our liquidity is also negative. Huge allocations to money market funds, increasing over $166 billion. Let me put that in perspective. We're at now 5.3 trillion in cash, money market fund equivalents, which represents 20% of the total stock market value. Normally, it's about a third of that. So I don't think there's a lot of downside with that type of powder, that magnitude on the sidelines. Buybacks have picked up. We had a buyback by Valvoline for $1 billion. We had a $4 billion buyback by Nucor. M&A, just a slight a glimmer of life there. The IPO market, again, a slight glimmer. So starting to wake up. We had J&J's $4 billion spinoff of what's called Kenvue, and it's done quite well. Valuations remain negative overall. However, on the smaller scale, the small and the micro caps trade at 10 to 12 times, near 2009 Great Recession levels. The S&P trades 18 times at a 14% premium to fair value by our models. And we're looking at other indicators like market cap to GDP neutral, to replacement value neutral, earnings yield to investment grade corporate yield slightly negative because interest rates have risen. Earnings momentum, and this is the big story, have risen up and they've turned slightly positive. So this is very encouraging. If this trend continues, it would confirm that we are in fact moving into a new bull market. We will look at next quarter. The EPS beat ratio was positive at 76%. The EPS beat margin also positive at 6.5%. However, our monetary indicators are negative. M2 is down 3.9% year over year. This is the fuel we need. We need it to be positive to power economic growth and equity appreciation by more assets flowing into the market. The silver lining is that rates right now, the Fed funds rate after 10 consecutive hikes, exceeds our current, what we call our forward rate, which is an equation we use to see what fair interest rates are at the market on the run. And right now they're about parity. We think that connotes the Fed should pause, we hope. So let's move into what has been driving the bull within the bear. Let's go to the whiteboard. Here we go. The Magnificent Seven, which is Apple, Amazon, Google, Meta. Let's see, we're at 4 now. Tesla and Nvidia and Microsoft has been tremendous. It has powered a 67% gain in those 7 stocks, followed by the triple Qs up 31%, the S&P behind that at 10%. Now, if we extract the weight and the return of the Magnificent Seven, we find it's been a down year. Not surprising. I think that's what most of us are feeling, unless we own a lot of the Magnificent Seven. The S&P 500 minus 12% without it. The triple Q, the Nasdaq 100, also down minus 13%. The key question is it too late? Is there more room to go? What will happen? Let's look at that question. And we find that there is fair value. Looking at the PE to G, PE to growth rate for the forward 12-month estimates, the Magnificent Seven is the most favorable at 1.13, followed by the Russell 2000 at 1.3, the S&P 500 at 132, and the 500 minus the impact of the growth of the Magnificent Seven at 1.9. And of course, our singular research coverage list even below the Magnificent Seven at 1.12. So this implies that at current levels, even after this appreciation, the Magnificent Seven with the growth is still undervalued relative to the market. All right, let's talk about the AI bubble and bring it on home here. Is it a bubble or not? Well, we actually have something that's a little different than eyeballs, a little different than pet.com, a little different than crypto stuff. We have something that is actually growing financially, generating revenue. 50 billion 2 years ago, estimated to grow to 320 billion by 2026. That's a 40% compound annual growth rate. And this is before NVIDIA's guidance 3 days ago, where they indicated that their revenue is going to be up 50% powered by AI. So it is real, it is here, and it is now. There's no question about it. And NVIDIA appears to be the leader with their parallel computing chips. They appear to be at the center of the universe for generative AI, which is the driver of the growth in this sector. And it looks to be a transition in the continuing metamorphosis and change in technology, Internet 3.0, as it were. So come to our website, singularresearch.com, and take advantage of a complimentary trial to get positioned for some, we think, favorable times moving ahead this summer. Powered by earnings, powered by AI, and powered still by the Magnificent Seven. I'm Robert Maltby. This has been Maltby's Minute on the Market.